Here is an example of your income statement, and it's called a multiple step income statement. Multiple steps. This is how the income statement will look like once it's presented. We'll show net sales. We start with sales means revenue minus cost of sales. This is your expenses. Gives you gross margin. Then your SG&A, selling, general and admin expenses. These are called SG&A expenses. Then depreciation is separately disclosed. You need to highlight it separately. They want to see how much depreciation expenses are there, because these are not your cash expenses. They want to see it differently. Income from operations. This is your net value, income or loss from operations. Along with it, it gives you other revenue and gains. Start with interest income. Underline the term interest income, and if you see other expenses, there is an interest expense. Don't net it. Please show your interest expense separately. Gain on sale of fixed asset is shown separately from loss on sale of fixed asset. Show them separately. They want it separately on your financial statement. And finally, other income is something which is so irrelevant that it does not need additional highlight in your financial statements. Once you have your other gains, losses, you move on to unusual or infrequent item. The or is in box, it's encircled. Unusual or infrequent item. Let's say, for example, and I'm talking about US here, we are talking about US, we'll talk about US states. Unusual or infrequent item. They are saying loss on sale of available for sale security. Let's talk here more in sense about US, and I'll talk about 3 states. This will help you understand things better. We are going to talk about 3 states. The first state which we are going to talk about is Minnesota. The other state is called California, and the third state is called Florida. If you have ever heard, seen these states in movies, you could relate to it, but otherwise I'll give you characteristics. Minnesota is considered to be very close to the North Pole, and that's why it's freezing cold out there. In Minnesota, the average temperature goes from -50 degrees to -10 degrees, and people survive there. The other state which I talked about, San Francisco, beautiful place. So average temperature ranges from 7 degrees to 17 degrees, and the last of the lot was Florida. It's kind of a warm place. Let's say your business, you're running a factory which is in Minnesota, and in Minnesota, the area where your factory was, there was an avalanche, which avalanche means your snow, your natural calamity from excess snow floods. These are called avalanche. If your property is suffering losses because of an avalanche in Minnesota, and you say, man, I lost a lot of my earnings in repairing my factory, I suffered a lot of losses, and I put it on the face of my financial statements. This is extraordinary item. This is extraordinary. I am suffering because of a natural calamity. There was avalanche. I lost a lot of money. Management is feeling very happy. They are saying extraordinary item. I will not be hanged for this loss. I will simply put this in extraordinary item. I'll come to extraordinary later, but understand why I'm using extraordinary item here, because I'm saying this is not in my hands. This is a natural calamity. I'm suffering losses because of avalanche. There was a snow flood which really impacted my factory. My production got cancelled for a couple of days. There were financial losses because one of the areas of my factory got disrupted, and it's put on the face of the financial statement. It's shown as extraordinary item. As an investor, I'll say, man, are you crazy? Are you crazy? You're saying you're staying in Minnesota and you don't expect these avalanches to happen? In Minnesota, every month there are 2 avalanches, and if you're not protected, not covered for these losses, it is not good management. It is not good management. Not an extraordinary item. Goes to your operating loss, take hit, you should be hanged for it. You did not take right management decisions. This was not correct management practice. You should have been covered for this because you could foresee these losses. This is not an unusual or infrequent item. It is not unusual in Minnesota that you get snowed, you get snow floods. It is not infrequent because in the past 2 years there have been around 20-24 avalanches. These are all hypothetical examples. These are not facts, but this will help you relate better to what I'm saying. Goes into your operating losses. Take the hit, man. Take the hit. You are the management. You did not take the right decision. Take the hit. Second stage, San Francisco, 7 to 17 degrees. Avalanches happened once in 5 years, once in 10 years. It had faced an avalanche 5 years or 10 years back. Avalanche happened this year as well. As management, I'm saying, man, I'm staying in a place where average temperature is 7 to 17. There was an avalanche. What should I do? As an investor, I would say, I know, but you should have been more careful. This has happened in the past. You should have taken insurance for it. At least taken insurance, if not additional precautions, if not protective gears for people. This is not so frequent, but you should have taken insurance, especially an avalanche happens every 5 years or 10 years. They should have at least some of your losses would have been covered by insurance. I know this is not your core operations. Maybe you missed it, but I would still say it goes into your operating statement as unusual or infrequent item. Show it separately. I'll give you that benefit of doubt. You didn't take insurance for the losses which may happen. Show it separately so that it stands out in your income from operations, income from continuing operations. But I would say still this is a hit for you. Still this is a hit for you. This is the understanding which the investor will go ahead, but gives the leeway to the management, saying when it was unusual or it was infrequent, because avalanches generally do not happen in San Francisco. They may be happening, but this is just an example which I'm giving, and these are not facts. Last state, Florida, hot place, 30-35 degrees, beach area. You get snowed there, man. Never happened. This is something which is so unique. What should I do? I never thought there's going to be snow, and we got snow flooded. My production got hampered. Absolutely, this is an extraordinary item because it is unusual and infrequent. It never happened. It is infrequent, and snow in Florida, nobody dreamt of it. It is unusual and infrequent. You could not have done anything, man. Don't take the hit. We empathize with you. We sympathize with you. Should go separately on financial statement, should be shown as extraordinary item. This is what IDEA means. See, these are the concepts which you should take into your consideration. These are the concepts which you should keep in your mind when you're doing your CPA.